What took me the longest was learning how to actively manage. Opening a trade is easy. Closing a trade is easy. Managing that trade is really hard. It's really, really hard because the market is forever changing. It's always doing something you're not anticipating, and you have to react to that.
Welcome back everyone to the episode on with Jean-Francois Boucher. We spoke a long time ago, 2016 I believe. So good to have you back, Jean-Francois. Good to talk about trading once again. You're someone that I really respect for your trading style, which is completely different from mine. You're trading something completely on the opposite side of mine. And so we'll discuss that, your trading, how you've been evolving, things you do now, and some advice for people on how to become better at trading. So what's been going on since we last spoke?
Last time we spoke, I had been diagnosed with leukemia, and so I went ahead with my treatments. I continued to trade at the same time. I was trading at the time for a hedge fund and a family office, and running my own accounts at the same time. Since then, since September of 2020, I started a therapy for my leukemia, and so in order to mitigate risk, I gave up trading for the hedge fund and for the family office, and I currently only run my own accounts. Therefore, I can't be held liable for problems, if I'm not there to trade on their stuff. So I would rather just focus on my own accounts. And at the same time, I've been educating other upcoming traders on how to do what I do, as well as teaching a evening class for adult learners, people that are in their 60s, 70s, that are interested in this kind of stuff, and they have nothing else to do than bingo.
Definitely better for sure. But you do look good compared to last time we spoke. I think you're making some progress in terms of that for sure. And that's good to hear for sure.
Yeah, my health has really taken a swing for the better. And so it's been about a year since I quit trading other people's monies, and I'm almost ready to go back. And so in the meantime, I keep practicing on my own, though. I have been running a couple of EAs, and the EAs in particular look for very small profits, just the same way that I do in my regular trading. But the EAs also employ hedging in order to mitigate risk. And I've had two of them now running for over a year, putting in about 10 hours of profit overall. So things are looking up.
Pretty good. And I know the interview we did a while back had a lot of views. People were really interested about your way of trading, which is scalping. I just scalp really small moves in the market, which is insane for me. Tell people what that trading style looks like and kind of what you're aiming for and what's the objective of your trading.
Okay, so a long time ago, I realized that myself included, everybody wants to become a trend trader. The problem with that is the trend, it does not last very long. If you look at most trends between ranges, there are only 2 to 3 bars. And so you're going to break out of a range, you're going to be in the trend for 2 to 3 bars, and then you're going to encounter a pullback and give up some of those gains. And right away, most people panic or can't withstand that pullback. The stress of pulling back is too much, so they'll give up on the trade. And so what I realized is that ranges are everywhere in between those trends. So why not learn to trade the range and already be in the trade when the trend starts? And so I became a range trader. I started to learn how to trade ranges. And so you could do that on any time frame. And I myself started trading ranges on the hourly chart. And then from there, moved down to a 1 minute chart in steps. Obviously, I didn't make the jump, the leap overnight. But on the 1 minute chart, a range is typically made up of a couple of bars. And a couple of bars on the 1 minute chart is 2 pips per bar, or 4 to 5 pips in total. And so if I trade the range, I can collect those 2 to 5 pips over and over and over until the range breaks out, until the price breaks out of that range. And then I find myself moving up or down 2 to 3 bars, and then into another range that's worth 2 to 3 pips per bar. And so the ATR is my unit of measure regardless of the time frame that I plan to trade, that ATR is what I shoot for. I want 1 or 2 ATRs of profit every time I click the button. And on a 1 minute chart, that 1 or 2 ATRs happens to be 2 pips, 2 to 3 pips. And so every time I click the button, I expect to be within 1 or 2 ATRs. If I don't, then you'll notice on my chart, I do have a stop loss. It's referred to as a long tail stop, right? And it's 35 pips away. And so right away, people start to panic because now their risk to reward ratio is obviously upside down. And I'm not trading for risk to reward. I'm trading for reward. The risk, that's my job to manage it. I manage risk. I'm a risk manager. And so because I have a 35 pip stop, that doesn't mean it's for the trade. That's to protect the account. It's not to protect the trades that I'm in currently. And so let's say black swan event comes along, all hell shakes loose, and you're whipsawed. In my case, my whipsaw will take me out of the trades at 35 pips. Hence, my account is protected beyond that. It takes me out of my current trade, but it protects the account. Myself, if I find myself taking a bad trade, I must manage myself out of that bad trade. I don't let the stop loss do that for me. I will either take the loss manually or use margin to maneuver out of that loss to a break even, or I'll hedge that position to buy myself time in order to maneuver out of that position. And so being a risk manager is an active role in this type of trading. I can't just let the stop loss take care of things. The stop loss 35 pip tail stop is there to protect the account, not to protect my trade. I do that.
We had a whole discussion before we started to record. I'm so sad that we didn't record this because it was so good, so interesting what you were saying. So, but if you want to show your chart, show people what you're kind of looking for and doing, that would be really cool. I think people would really appreciate.
I'll share my platform. I use a broker called Global Prime. It's an ECN broker, A-book. And so I think you spoke with Jeremy.
I'll definitely try to leave that interview linked below the description.
Yeah, and so
you'll listen to the screen also.
Basically, what I typically do, like everybody else, we all have our universe. We all have a group of pairs or instruments that we like to follow or keep an eye on. For myself, I like to look at gold, silver, oil, natural gas, Bitcoin, one exotic pair, which is the Mexican peso. I can go into details why that is later, but and then most of the indices I try to look at. From there, my main focus has always been on Forex, and so I look at the majors, especially when there's news coming about. I think on Wednesday we have CAD news, and then on Thursday we have the ECB coming, and so that's the chart that I'll be looking at. From there, because my bread and butter trading is always on the euro, and it's always at the same time of day every day, and I try to be finished at the same time of day every day. I do what's called a top-down analysis, and so I'll start looking at the daily chart, and from once I establish my bias on the daily chart, I'll break it down with an hourly chart, and then because I know that I trade ranges, I start identifying the ranges on the 5-minute chart. And then once I've identified the ranges, I'll be playing them on the 1-minute chart. And I do all of that here. And so I'll play, I have the daily chart, I have my hourly chart, and then I have my 5-minute chart. With the 5-minute chart, I will identify where the ranges are, and then I'll be playing those ranges on the 1-minute chart here on the left-hand side. And essentially, like I suggested earlier, that upside down risk to reward ratio is not something I'm really concerned about because I actively manage my risk. I don't let the stop loss do that for me. And so in this particular instance, if you look up at the top here, I started trading about 2.5 hours ago. I'm up $200 on the day. A lot of people out there are still waiting for that perfect trade to set up, right? They're still waiting for that perfect entry or for that qualification trade. They have to be qualified into a trade. I just traded ranges. I traded the range here. I traded the range there. I traded the range here, and I traded the range there. And right now I have trades pending on that range. And my pending drawdown, if we look here, my drawdown currently is, 7 pips of drawdown. And so that to me is negligible. I can survive that. Now, if it starts to move against me, I will have to employ extra margin in order to maneuver to a break even, or I can possibly hedge that trade in order to buy time and to exit to a break even. And so one commits to the loss where one commits to delaying the loss. And so it's up to me how I manage that. And, it's a private, personal thing based on the news that's coming, how you feel the biases and all this kind of stuff. But nonetheless, we're looking for a range. We're looking to remain inside that range. You'll notice this range up here, once we broke out of it, it fell 2 bars before coming into another range. For some people, that's a trend, right? This would have been a trend, and then they got pulled back. And then there's another trend and another pullback or reversal for that matter. And so it's based on perspective. Trading ranges buys you more opportunities. There's more ranges in the market than there are trends in the market. And most trends are 2 to 3 bars. And so before you encounter the first pullback or the first reversal. So there's more opportunities going sideways than there are going up and down, if that makes sense.
Yeah, I totally agree with that. Now, you're looking at a 1-minute chart for your trades. You have a 5-minute chart,
Yeah.
a 1 hour, and a daily chart. What's the importance of all these time frames?
Well, the top-down analysis gives us an idea of where the market has come from, what it's attempting to do. And because I'm a very short-term trader and I go flat at the end of the day, meaning I close all my trades, I want nothing on the book when I'm finished trading at 10 in the morning, my time. And so I need to be able to know what the likelihood of the outcome is ahead of time. So this top-down analysis really helps in doing so. I don't know if you're familiar with trading pivots, but pivots is a calculated level. The calculation never changes. Black boxes, gray boxes, target pivots over and over and over as a high probability trade. You'll notice back here on this particular day here, we never came to the pivot. The yellow line is the pivot. The price never came to the pivot. The day before it did, the day after it did, each day after we rotated around the pivot. This day, 4 days ago, we never did, although today we have, right? And so these pivots are magnets. And on the daily chart, I use Ichimoku to realize support and resistance and long-term forecast. The hourly chart gives me an idea of where swing areas will be. And so the lines that you see here are Camarilla pivots. Camarilla pivots are a form of traditional pivots with a multiplication factor that tightens everything up. So you have a better chance of hitting the pivots. And essentially, what a pivot that was missed 4 days ago attracted price today, right? And the likelihood of us rotating around from this level is very, very high. Just like it did here, here, and the day before the missed pivot, right? And so this top-down analysis gives me an idea of where to expect those ranges. And then the ranges, I get them in front of me on the 5-minute chart. And now I can target from one range back to another range. Support and resistance, right? And so If supply and demand is the glove that fits support and resistance, I trade support and resistance. Some people trade supply and demand on the higher time frames.
Interesting for sure. Now, what makes you decide to enter a trade, either go long or short in 1 minute? This is based on, I know you're trading only price action, so you have no indicator at all
Yeah.
for your entries. How do you decide to enter?
The majority of the trades are based on a 3-bar reversal. And the 3-bar reversal, if you look at it on a higher time frame, is likely to look like a pin bar. And so a lot of guys will see a pin bar on the 1-hour chart, and they'll take that as a valid trading signal. I'm already in that trade because I saw it as a 3-bar reversal on the 1 minute or the 5 minute or the 15-minute chart. And so it takes a 3-bar reversal to make a pin bar. If you see the 3-bar reversal, you're already in the trade while the pin bar trader is still waiting for it to confirm.
So a 3-bar reversal would be like a, let's say, bullish candlestick, then a neutral, then a bearish. Would that be what it looks like?
A 3-bar reversal would be something like this back here, where you overtake the apex or you overtake the nadir. The nadir is the bottom of the apex, right? The bottom of the 3-bar reversal. And so let us find one here. There's a good one right here. And so you have this little blue bar, and then you have the nadir or the apex right there. And then we broke the bottom of the apex, 3-bar reversal. And then had I taken a trade there, I could have earned another 2 pips down here.
Interesting. So that's never something I would enter for the fact that it's like at the bottom of a big move, and I would have a huge stop loss, but because of the way you trade, it's different. So that's really, really interesting to see.
Yeah, and so my stop loss is always 35 pips away, and it's not something that I let the market reach. I won't allow the market to get there without me getting involved, right? I will either hedge that off or I will add margin. Some people say never add to a loser. But it's not a loser. It's part of the plan, right? This is part of the strategy. I'm not adding to a loser. I'm adding as part of my strategy. And my strategy enables me to bring that losing trade to a break even and minimize my loss. And that's why the strategy is in place. That's why the strategy is there. And that's why I employ that tool in my toolbox. And so adding to a loser, I can actually see the purpose in that. I know why you don't want to add to a loser, but it has to be a losing trade in the first place. You have to have called it a loss. Does that make sense?
Yeah, it does, but you got to be aware of the news all the time. You got to be aware of what news is coming up for sure.
Yeah, and the really important part of trading the way I trade is to not put all your bullets out in one shot. You want to keep dry powder. You want to have extra margin in this on the side just in case you need to use it. And so the way I typically trade is you'll see here I have almost a full lot on these trades here. Typically, I would use 1 to 1.2 lots per position. And if I need to fix it, if I need to fix a rogue trade or a bad trade, I may double that. I may go up to 1.2 to 1.8, 2.0, but never go beyond. Like there's a limit, right? You don't want to put all your margin on the line. And so it's managing risk using margin. Basically, I like to fall into a long trade, or I like to shade a short trade. I want to be at the opposite ends of where the retail traders are. I want to be the guy that's selling them the ask or buying the bid from them. You'll notice on this particular platform, I can buy the ask or I can sell the ask. I can buy the bid or sell the bid, right? I'm selling it to you guys. That makes sense?
Yeah, it does. It does. What made you want to go on the 1 minute chart? Why not like a 5 minute or 15 minute? Why the 1 minute chart?
Because I have better control over my risk. I can control risk down to 1 penny. Right? I can do the same thing on the 5 minute chart, but I'm losing a 5 minute bar. Whereas on the 1 minute, I can see the move, I can see the break. There's a 3-bar reversal right up here. Right, 3-bar reversal. So there's 1, 2. This bar is breaking the low here, and now we're into a short. And the idea that we can profit 2 pips at a time. Once I'm out of that trade, I'm risk free. Right, and my whole purpose in this is to be risk free each and every day. I don't hold trades overnight. I sleep like a baby. I come back to work the next day and I start fresh. It doesn't matter to me what the Europeans did overnight, what the Asian market did overnight. It makes no difference. I come back, I review, I do my top-down analysis, right? Obviously, tomorrow is going to be 1 more bar added to this, but I have to redo my top-down analysis. I can't just assume things did not change very much overnight. I always review the top-down analysis. And then likewise, the hourly chart, the 5-minute chart. And then on this 5-minute chart, what you'll likely see me do often is draw lines just to identify where the ranges are, right? If you know how to trade a box, how to trade a rectangle, basically I move in and out, and I could take my rectangle and move it 1 box down and then move another box down. The width of the box is typically the same on the chart. And that's where I make my 2 pips, 2 pips down, 2 pips up, 2 pips down, 2 pips up. And it's not, it's counterintuitive. Most traders don't like to do this because they rely on their stop loss to prove them wrong, right? They want to be proven wrong, but they rely on their stop loss to do it. I rely on the price action to tell me that I'm wrong, and I rely on that same price action to tell me what to do. Right? Do I need to hedge? Do I need to add margin? Do I need to just take the loss? Right? And when I do just take the loss, it's minimal compared to the 35 pip stop. The 35 pip stop, like I said, is to protect the account. My account will never blow up because I have that 35 pip stop there. There's not one trade that can take everything to hell, right? And I don't ever leave trades open overnight unless I'm required to by my employer, whoever the fund is that I'm working with. And so some of them, like here in Jasper, there's a family office that I help once in a while, and they get a lot of deposits in US dollars. We live in Canada. And so they let me trade their US dollars to give them more Canadian dollars in the account, right? And so I basically wash their money for them. I launder money. But because they have a lot of US clients, they get a lot of US money in the account. And so I purposefully make more Canadian money out of that US money on their behalf. And so that basically forces me to swing trade. And by swing trading, then I'm left having to have trades open overnight on their books. It's not on my books. My books, I'm always flat at the end of the day. And trading in that fashion allows you to sleep better at night, take smaller risk, and manage that risk more efficiently. And the beauty of Forex is you can manage risk to 1 penny, right? You can manage risk all the way down to 1 unit of measure wherever country you live in. Unlike stocks, where you have to buy 1 share. Now you can purchase partial shares, you know, with platforms like Wealth Simple and stuff like that. But you forego on customer service. You're not going to get the best price. If you try and phone the broker, they likely won't answer your phone. They'll tell you to chat online. And so you don't pay commission, but you pay in other ways. This way, the way that I trade, two pips at a time, with a legitimate broker that's not trying to profit from my losses. They're not going to try and force me to lose, right? They're not going to widen the spreads on me just because they want to see me lose. It's easier for me to trade in this fashion because I am an active risk manager. I'm not a passive risk manager, right? I don't sit on my hands and wait for the stop loss to trigger me out. I want to manage my way out of the trade before the stop loss comes. And these ranges, a range like this, that's typical, right? This is typical of what we normally encounter. And it's not abnormal that, so I'm adding a couple of positions, thinking that we're going to come and revisit this area here. And if that's the case, then I'm adding a couple of wins to my roster. If I go and look at my statistics, until I take a loss, I cannot report a Sharpe ratio, and I can't report a win-loss ratio because I haven't lost yet, right? And so my drawdown was $14, right? At the most, my drawdown has been $14, and that's because I trade on the 1 minute chart, right? And so everything I do on the tightest of the time frames that I can, and it still earns me money. And if I'm efficient, I earn more money because I don't really care much for the trends. I worry more about the range. One of my tutors years ago told me flat out, if you learn to trade ranges, you'll get hired on the spot. Most people, 90% of the people you speak to, they're trend traders. In their mind, they're trend traders, right? They think they're buying low and selling high. That makes me a trend trader. Well, no, it doesn't. You have to withstand pullbacks. You have to withstand drawdown and reversals. You have to be able to count yourself as a trend trader. You have to survive the trend. You have to be in it from the bottom to the end. The internet also tells you to not pick tops and bottoms. Well, if you're trading ranges, that's all you're doing is picking tops and bottoms, right? You're picking the top of the range and you're trading it to the bottom of the range. Then you're turning things around and you're going back up again. Give me 1 second here and I'll bring up a little.
Yeah. By the way, I'm not sure people notice, but you're getting in and out of trades while we speak, which is insane.
Yeah. This particular picture here explains a lot of what I try to do. The idea that I trade the range, and most people want to be the trend trader. They want to capture the breakout. I'm already in that trade. I took the best price. If I play the range, I'm already in this trade when the breakout happens. I just have to hold on to my trade and not take 2 pips. Everybody else is waiting for that breakout.
Why not use like a indicator like the RSI or something to add confidence to your trades? What makes you want to go with just price action? I'm very curious to hear you on that.
I used to use the Williams %R. Williams %R is a momentum indicator, and the momentum indicator, if you're unfamiliar, is not bound to a scale. It floats. It has a floating scale. Sometimes it's at 70, sometimes it's at 110, sometimes it's at 30. There's no scale. The scale floats. And so that does not really bode well for forecasting overbought and oversold areas. And so what Bill Williams did is he took this momentum indicator and he applied an RSI to it. And so now you have momentum that's bound to a plus or minus 100 scale. So now you can have overbought and oversold zones. And now that you know how the indicator works, it makes a lot of sense on how and when the overbought and the oversold areas get triggered. You can actually physically see it. And so each indicator out there was built with a very specific purpose in mind. RSI, no, relative strength index, MACD, right? Moving average, convergence, divergence. It's in the name. Use it for what it's built for, right? I don't have an indicator built to tell me when my range is over. I can use a stochastic, I can use an RSI, I can use pre-built indicators, but they weren't built for my purpose. And so I chose to not use them, right? The only thing I really need to worry about is momentum. And the momentum, I notice, because the markets are not random, far from it, the markets are circadian in nature, right? The markets open and close at the same time all the time. It's the same participants that come in and out most days. The news comes out like clockwork. There's no randomness in these markets. The people make it random, but the markets themselves are circadian in nature. And so I know that if I want volatility and I need volatility to earn money, I can trade it during certain times of day when that volatility is always there. And so I've scheduled my business around that volatility. I don't need an indicator to tell me volatility is coming. I just need to look at the clock to tell me that volatility is coming, right? And then by picking 1 or 2 ATRs of profit at a time, I'm not looking at a 4-hour bar. I don't need 2 4-hour bars of profit. I'm looking at a 1-minute bar. I only need 2 1-minute bars of profit. And I don't know about you, but it's a lot easier to tell what's going to happen 1 minute from now rather than 1 hour from now.
Right. That's a good point.
It's really hard. It's really hard to see where price is going to be in 1 hour, but it's really easy to see where price is likely to be in 1 minute.
How many hours a day do you trade? Do you have a schedule that's fixed, or do you look at the markets and decide?
No, I have a fixed schedule. I live in the Rocky Mountains, and so when it's 10 o'clock Eastern, it's 8 o'clock my time. I try to be done by about 9:30, 10 my time. So when it's noon in New York, I want to be finished. And I typically trade about 2 to 2.5 hours per day.
Not that much compared to what some people could think, that you trade all day or you're from.
Oh, no.
Not that much.
You start to lose interest and start to lose focus at approximately 1.5 to 2 hours into your trading session. And so I try to max 2 hours, I'm done. Because I live in the Rocky Mountains, I have a 2-hour time zone difference. And so if I start at 6 o'clock my time, that's 8 o'clock Eastern, the stock exchange just opened. And so I try to come in a little before that. I want to be here. I want to be at my computer when the stock exchange opens. Not because I trade stocks, it's just because the participants are there and the volatility is there and the momentum is there. And whatever happens to bonds usually trickles down onto Forex anyways. And so it's one hand shaking the other. You can't have one without the other. The way we look at the market, because I have a very narrow view, I have only one job. And for me, my job is to trade the euro. I have this verse that I look at. That's just to give me a good feeling of what the market is doing, not because I want to participate in any of those markets, right? My bread and butter is always the euro. I don't really care what the yen is doing. I don't care what the S&P is doing while I'm trading. While I'm trading for that 1.5 to 2 hours, I want to be focused on what the euro is doing and where those ranges are. And the likelihood that we revisit the same price is extremely high. I'm sure you've yourself have noticed, but the Forex market is a mean reverting market. You get to see the same price typically multiple times. You'll take a trade, you may miss the exit and then give up all of your gains, and you'll see price come back to your entry. Right? That happens all the time. Unlike stocks, the stock market is bullish by design. There's always more stock buyers than there are stock sellers. Always, always, always. Stocks go up by design, right? There's no business in business to go broke. And so to be listed on the stock exchange, to be listed on as one of the indices, if you're one of the S&P 500, the minute you don't qualify to be there, they take you off and put somebody else there, right? The it's all designed to go up. The entire industry is designed to take your money. They want you to buy stocks. They don't want you to sell them. They want you to buy them, right? It's a bullish market by design. So if we know that ahead of time and we know the implication that it has across the other instruments, you can benefit from that. And that correlation, I chose to not profit from, and I wanted to focus on a 5-minute chart, a 1-minute chart, make a couple $100, and then be finished for today. And if I do that 5 days in a row, then I have $1,000 at the end of the week, right? And it's really, really important that I stop trading every day. Otherwise, I start to give back some of those profits. I start to overtrade. I start to make silly mistakes because now I'm tired. It's 2 hours already, right? And so operating as a business with business rules around my trading. So I have start times, I have end times. I don't work overtime ever, right? I operate as a business, and as such, I have business results. I don't have hobby results. Hobby costs money, business makes money, right? So part of what I do is logic. Part of what I do is a very small part of what I do is gut feeling. Most of what we do is analytical, it's process, and it's repeat. It's boring, right? Trading after a while is boring. If it's not boring, you're doing something wrong. If it's too boring, you're also doing something wrong, right? And so the fact that we have to have a little bit of excitement, that's probably why we started trading in the first place, right? But now that it's become a job, it's become a purpose, the government doesn't ask me to pay capital gains anymore. They ask me to pay taxes, right? Because this is a job. It's not just a part-time thing. I'm trading as a business. I therefore have to pay business tax, right? If it's mom and pop trading once or twice a month, at the end of the year, the government will say, now you owe us capital gains, right? You have to pay capital gains. It's very different. So because we have a purpose and we have to do this logically, and our goal is to not blow up, you want to do this for as long as possible. Having a long tail stop makes a lot of sense if I'm an active manager. And what took me the longest was learning how to actively manage, right? Opening a trade is easy. Closing a trade is easy. Managing that trade is really hard. It's really, really hard because the market is forever changing. It's always doing something you're not anticipating, and you have to react to that. And if you have a broker that allows you to hedge, that allows you time, that doesn't mean you don't take the loss. It just means you're not taking it right this second. And so you're postponing the inevitable, but at some point you're going to have to collapse that hedge. You're going to have to flatten and take a loss on one side and a win on the other. But in the meantime, you have the time to strategize. You can come up with a strategy with a high likelihood of an outcome that's better than taking the loss. And that's where it takes a long time. It takes a lot of practice, and you don't need tens of thousands of dollars to do this. A lot of people want $10,000 to start. That's a good start, but you can't make a living with $10,000. You're going to stress yourself beyond and start making, crazy mistakes. If you want to trade for a living and trade for income like I do, a good place to start would be 40 or 50,000. That way you could trade 1% at a time, staying 99% flat. The concept, the idea that you want to be 99% flat remains valid. The long tail stop will protect that 99%.
This has been a good discussion. I know I want to respect your time because it's been an hour already, but it's been really good. And I know people got a lot of value from this for sure. Where can they contact you or connect with you if they want to reach out after the interview?
Well, I still have my website. It's more like an old newspaper. It's not really, just a sec. It's over here. You can come and find me here, jasperforex.com. And from there, I have links to my FX book and some of that other stuff that I have running. There's the EAs that I run are there only because I'm not trading 24 hours a day, but the strategy that the EAs employ are very close to what I do in real life. And so they're looking for 1 to 2 bars of profit on a 1 minute chart. They do it across an array of pairs where I only trade the euro, right? So myself, I only trade the euro. The robots, they'll trade all 28 pairs, depending on how much money is in the account. And so, but they do the same thing. They look for small amounts of money. And if they don't get it right away, the trade gets hedged. And then we look for a high probability exit, the same way that I do, right? But the EAs, the robots are not foolproof. They're not set and forget. I do have to look at them. I do have to manage the trades that go rogue, the trades that go crazy. And matter of fact, I don't stop the robots for news. I don't stop the robots for anything. I take over the trades that go bad. And so if, for example, the robot is running on 20 pairs, on any one day, there might be one pair that has a bad trade on it. I may have to get involved on that one pair to better the situation. But it's not it's not by any sense of the word a set and forget. That you have to be involved in that style of trading, and that goes for pretty much all style of trading. You can't just set and forget. Even position trades, you have to look at your portfolio once in a while. So, but yeah, in the end, range bound trading, there's more ranges than there are trends. And if you realize that a trend gets interrupted by a range every 2 to 3 bars, then why bother trading trends? Just learn to trade ranges, right? And from there, everything changed for me. Once I realized that trends don't last very long, right? Regardless of the time frame you look at, a trend always gets interrupted by a range or multiple ranges. And so instead of getting interrupted and giving back gains or giving back profits, I would rather learn to trade that interruption and participate, right? And then be flat at the end of that day. Now, this particular range is pushing the higher end, right? If it gets up to around here, I'll be adding to my existing position and then looking to come out at break even. While my long tail stop is all the way up top there. Right, so I'm still way, way, way far away from my stop, and I still have lots of room to operate. As long as you're able to operate within an envelope of risk, you have to be able to work within an envelope of risk. In my case, that's 35 pips. I'm okay within that 35 pips. I can maneuver in and out of trades within that 35 pips and still finish the day positive. A lot of people will start to panic when the price gets close to their stop loss. And that's when they move the stop loss, right? That's the wrong behavior. That's the wrong behavior. The stop loss is there to protect the account. It's not there to stop the trade. Your job is to stop the trade, right? Your job is to be proven wrong as soon as possible. And that would have been 1 bar moving against you, 2 bars, maybe 3 bars at the most. That's 3 ATRs back, right? When I traded for the family office, my mentor there, he was a really big proponent of price and time cycles. And so you would want to measure, 5 or 6 upswings, and you measure 5 or 6 downswings, and you average the number of bars and the number of pips. And that tells you what to expect forthcoming, right? It's just like the baseball players, they have average statistics. We do the same thing with the market. An average up leg is so many pips, so many bars. An average down leg is so many pips, so many bars. And then you start targeting those averages, right? And so a time stop, if you haven't reached your target in your average number of bars, take the loss, stop the trade. That's called a time stop. 99% of the people out there will never do that. Yeah, it's too hard. The comprehension is easy, but to actually do it, it goes against their values. And so a time stop is extremely valuable, especially in situations like I'm in now, where things are pulling against me. They're not trading in my favor, and my clock is ticking. I'm almost finished for the day. So at some point, I have to say, okay, am I taking losses? Or am I going to hedge this and work an extra 10 minutes? No, I can't do that, right? And so because I refuse to work overtime, there comes times when you have to take the loss. You just have to. And in some cases, it's because of time. And that time stop is as important as a price stop, if not more important, because time is money, right? And so instead of wasting the next 2 hours waiting for this to close, I'm just going to close it. And I can use that money somewhere else. And that's the beauty part. A lot of people will sit on their hands and hope for trades to come back. They hope it's going to come back instead of just taking the loss and go dig yourself out of the hole somewhere else. Make money somewhere else, right? Instead of hoping and praying because there's no room for them, right? And so, but logically, trading a range has more opportunities than trading the trend. And all day today, you would have had 2 trends, right? Maybe 3 if you were willing to reverse your bias, right? There's only 2 trends today, whereas lots of opportunities to go sideways, okay? And so that's basically what I do. I trade for 2 to 3 pips. On a smaller time frame because it gives me more opportunities to manage risk, and I do it every day like clockwork, and I operate within the business plan and a clock. I don't work overtime, and I'm finished at the same time all the time, just like the markets kind of wind down after the Europeans go to bed. Once the European market closes off for the day, there's really no momentum left. And if you're left sitting on the trade in the afternoon, you're waiting for tomorrow or overnight to get more activity because it's only going to go sideways. Why not make money while it's going sideways, right? The same way I'm trading here, I can do all day, 24 hours a day. You could do this in the Asian market. You can do this in the European market. I do it in the morning in the American session because that's where I live. And it's profitable to me that way. But you can trade ranges in the Asian session just the same. Right? There's ranges all the time, everywhere. There's not trends everywhere all the time. One last tidbit. If we look at things like Aussie US or the CAD, this is a trend right there on the euro. This is a nice trend. This is a trend. But look how many times the price got overlapped. The price you see here, you see it 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 here. The same price comes back over and over and over. How is that a trend? Does that make sense?
Yeah, seeing it that way, you have a good point.
Right? So how is that? And so if I see this as one big range, even though it's a 5-minute chart, I have opportunities in here to make more money than the guy that's waiting for the trend. Right? And so, yeah, I think my mentor was right when he told me years ago that trading ranges is more profitable than trading trends. And I wholeheartedly believe that. He's absolutely right. Absolutely right. Especially as short-term traders, right? You cannot trade trends on the 1-minute chart. It's, you can, but it's pointless. There's more money to be made going sideways.
Awesome. A lot of good thoughtful advice for sure here. And if you guys watched till the end, make sure you comment below. I want to know because you didn't see committed if you watched this up to now. I think it's really good. And thank you, Jean-Francois, for this. I think it's been awesome to discuss and awesome to catch up, of course.
Yeah.
Looks you're doing great and things are moving on really nice, and that's really cool. And I love hearing your style and kind of challenging my way of seeing things, challenging my perception of things, which is really good. And yeah, I hope to talk to you soon.
Yeah, absolutely. I hope to be able to come back on soon.